Hello traders, Jason here with SwingHigh.com. It is Monday, December 7th, 2009. This is your halftime report. And the big news right now, it can't really be that big of news, but the news is that stocks are up today while the dollar is up, which is interesting because recently we've had an inverse correlation. Take a mental picture of this chart, which is the daily chart of SPY, and now I'm going to look at the chart of the dollar, and you can see the dollar has gone down over the same period that the index has gone up. So at least in the past year or so, we've seen an inverse correlation between dollar and equities. And just, I mean, one day doesn't make a trend. We'd have to see this carry on for a few weeks before we even consider it too significant, but it's just an interesting note that stocks are up and the dollar is up. So because I didn't get your weekend review in, I'll do a quick analysis of the broader time frame here on this is the S&P 500 tracking ETF, and right now what I'm seeing is a high base formation. It's a little weak, but it's still a high base because we have a run up and then a sideways base. These are bullish. They are just a consolidation period, and basically it's sort of like a spring-loaded, I don't know, it's sort of like a spring, if you will. It coils up in the consolidation phase, and then once it breaks out pretty hard in either direction. But most high base consolidations are bullish, meaning they do tend to break out to the upside. And as bad as the end of last week looked, it wasn't really that bad. It's hard to even call it bad because we put in new highs the last 3 days of last week, but then pulled back pretty hard. All the while holding up above this 110 mark, which is a big area of support from this most recent swing high. This isn't really a swing high yet. It'll have to be a swing high if we make a down leg, which, I mean, this is a mini down leg right here. It's not really a down leg. This isn't a down leg. Kind of need 3 continuation bars in a row at least for it to be a down leg. So right now on the daily chart we're seeing a high base. The weekly chart also sort of a high base consolidation here. If we do break above this 111, 112, well, once we break above 112, if we do have our next resistance area coming up at 120, so we have some room to run there on the weekly. Let's look at the monthly, and I'm going to switch over to SPX because I have a line drawn in here for the monthly chart. And as you can see, so far in the month we are continuing the breakout of this downtrend. So that's your broader time frame analysis. Let's look at the intraday action here. Barely a gap in either direction, pretty much a neutral open. A push higher. Let's see that on a even shorter time frame. Got a push higher, and then basically we're just putting in a consolidation day. And not much pattern is going on here today. Sort of just a sideways chop. Anyway, the S&P is up 0.14%, give or take. The diamonds up 0.27%. The NASDAQ down 0.05%, not much though. The IWM, or the Russell 2000 Index ETF, up 0.18%. The financials down pretty hard, down 0.6%, so some real relative weakness on the financials today. That's significant to note. Let's look at the dollar, intraday at least. It is, well, not really up. The dollar is also kind of flat today, if you will. This morning it was up pretty big though, but it definitely pulled back, which is interesting to see. Gold down 1.3%. So that's a pretty big move down in gold. The tick is predominantly bullish. The trend is bearish, and the VIX is up 3.5%, which is bearish. So sorry I didn't get to explain why, but I will at a later time. So thanks for being a part of SwingHigh.com. Check back this afternoon.